what they have acquired, Gavin. I think my personal sense is, for a 90 million top line company, they paid about 880 million. So I think it looks a bit stretched and expensive. And unless and until we see some concrete numbers coming in from the profitability side, what kind of incremental top line and profitability Gavin contributes, I would presume the markets would look at it a little cautiously, and probably, after even a 12, 13% price cut in the last, 4-5 days, my sense is the stock is likely to remain under pressure, because clearly the headwinds for the next couple of quarters are going to be weak. There are no major kind of product pipelines in the works for Lupin. So I think probably only after the December quarter numbers you could see some improvement in the earnings, but clearly I think there could be some earnings cuts also for FY16.
Okay, the stock was at one point, I think it got to about 17.10, 17.15 or so, then it sort of went right back up. You think there's more? I mean, could lose another 10% easy from here, Avinnash?
I would say, Prashant, roughly levels of around 1650 or 1670 look possible. I think this level of 1700 may not hold on, because I think the way the performance has come, I think actually it has given a big negative surprise as far as the EBITDA margin is concerned. The US markets have underperformed. I mean, the management seems to be covering up the underperformance in the US market by buying this US company, but clearly, benefits would take a long time to trickle in, from this acquisition. And even on the valuation side, 9 times top line what they have paid for this company seems to be a bit stretched, and I think probably you could probably see some benefits coming in only after, say, 2 to 3 quarters.
Yeah. This is what Avinnash, this is what Citigroup writes, right, about Lupin, and we put some of these things up. And I'm just putting this out because they seem to have a slightly more charitable view on Lupin. They say that first quarter results missed marginally, but there were no major surprises. There's this Form 483, but they say that management has confirmed that this is procedural in nature and there are no data integrity issues, which are the data integrity, data quality issues are more serious. This is just procedural. I mean, could be facility management and things like that. So that's the regulatory aspect. And on the acquisition, they write that it enhances Lupin's scale in the US and would be earnings accretive in the first year. So I'm just kind of presenting the opposite side, because there will be people who would want to buy into that as well. How would you respond to that, Avinnash?
No, I think, Prashant, let's see how the acquisition pans out, because I think on the face of it, I think if the management has paid such a big premium, obviously they must have done their homework. But my sense is, I think at least in the shorter term, at least till maybe another 1 or 2 quarters, until core earnings don't pick up, I think the US market doesn't show a good rebound. I think US is a very big market for Lupin, and that is where it has underperformed. I think in terms of profitability, to come back to a level of again 33% EBITDA, I think would be something which is more important now. In the near term, this could be a key challenge. So, I mean, I would prefer to wait rather than rushing in now.
Right. Okay. So Sun is done, Lupin is done. Now what? I mean, I guess makes you wonder. Manav, Lupin?